Okay, guys, time for the closing entries. If you remember from, I think back in chapter 8, counting 1, there are 4 closing entries. Closing entries. We are going to close anything on the income statement with a credit balance. We are going to close anything with a debit balance. We're going to record the net income, but in this case, it's going to be retained earnings because now it's more of a full financial statement. And we're also going to close out our dividends. Before it was closing out our drawing. But in here, since we're working with a merchandising business, it's going to be to close out your dividends. They're very similar to before, they're just a little bit longer. So let's go to 16.4. Let's go to the OWP and then work together. It's going to be broken up into different sections. So for each one, we'll do each one of the, the instructions will do close the credit balances, close the debit balances, and so on. All right, so the first thing we're going to do is we're going to look here. Now, you have to remember what is on your income statement. So it would start with your sales. So we're going to look at sales down is all the stuff that we will close. Okay, and if you remember, we're going to use the income summary to close it into. And that also will eventually close when we are finished with all this. All right, so the first thing it says, use Superior Corporation's trial balance and financial statements in the question assets to close the income statement accounts with a credit balance on page 19. Okay, so here's page 19. I don't believe we have to post this, which is kind of nice. So starting with sales, we have sales, anything with a credit, purchase discount, purchase returns allowances, and your interest income. Okay, so all of those have credit balances. We're going to close those. But we're going to close them into your income summary. So let's start with our date, December 31st. We're going to start with sales. And just remember, your adjusting entries and closing entries do not have a doc number. And I wrote these all down, so I'm just going to start the plug away here. So sales was 505, 897. Hopefully I wrote it all down correctly. And then purchases, that purchase discount, that was 737.71. Purchase returns and allowances was for 1196.01, and then our interest income was for 466.20. We're going to add those guys all up, and we're going to close them into income summary. All right, so let me just do the math here. 505,897.4 plus 737.71 plus 1196.01 plus 466.2 equals 508,297.32. That's going to be my credit balance. So 508,297.32. Okay, so that was step 1. Close anything with a credit balance, and closing, if you recall, means to get the balance to 0. So once we would post these into the appropriate ledger, they would be a 0 balance. Let's go ahead and grade that step. All right, all the math is good. Let's go to the next step. Okay, the next step is to close anything with a debit balance. This one is a little bit longer. You'll notice there's a lot more lines. Not that it's more difficult, it's just that starting with your sales, we do have a lot more accounts. So if you look at sales discount all the way down, all these guys, all the way down to your federal income tax expense. Okay, so we have to type those guys all in. I'm actually just gonna, I'll grade it for you so you can just see it instead of wasting time and typing it all in. But the date would be 31. Your debit here would be income summary. And then your debit to income summary would be the you would add up all of your credits. And I did, like I said, I did do that before. I wrote it all down on my paper, but I'm not going to type it all in. Okay, it's 429,376.63, and then we would just start with sales discount. I'll do the first few, and I'll do the last few, and then I'll just go ahead and grade it. Okay, then I'm just gonna, like I said, I'm just gonna scroll ahead and do these last few. Obviously, I'm gonna get them all wrong, but that's okay. You understand. You get the point of what we're trying to do here. So we're just trying to close all these guys out so they have a zero balance. So when we would post them to the ledger, okay. All right, they're obviously all wrong, but here it goes. So we have income summary, debit for the total, and then we're going to list all of our accounts out from sales discount all the way down to federal income tax expense. They are all going to be credits. So when we post this credit to the appropriate general ledger, it will zero out that account. And that is part of the closing process. Okay, let's go to the next step. And I'm going to stop this video and make another one for the last two steps.